Good afternoon, this is William Adams from Fast Markets on Thursday 23rd of December at 3:35 London time. As you can see here, looking at daily copper chart, prices have pulled back. They've pulled back down below the fairly steep uptrend line, and they've breached the 38.2 Fibonacci retracement line as well. That was at 92.15, and we've been down to a low of around 92.08. So prices are just finding a bit of, been down to a low of 92.03. Prices have found a bit of underlying support here, getting a bit of lift, but we would draw your attention to the fact that the stochastics have crossed lower, and the fast line is beginning to drop quite fast. So again, we wouldn't be surprised to see prices come back down through these Fibonacci levels. So the 50% line is at 91.61, and then 91.06 is the 61.8 Fibonacci retracement line. If we get more of a sell-off getting underway, then we'd look for support from this former peak here, and along this sort of support line here, which is at the 89.66 level, and indeed that's very close to where the long-term uptrend line is as well. So that's another sort of potential area. That's 89.58. So potential there for good support, although there is other areas of support between where we are now and the, as I said, the 61.8 Fibonacci retracement line at the 90, just above the 9100 area. Looking at aluminium, prices have put a strong rebound so far this week. They fell short of getting back up to the 2500 area from the early November highs. They've run into a bit of selling today, although there is some scale down buying by the sounds of things. We've had a low of 24.25. Prices last at 24.40, so it has run into a bit of buying. Stochastics though beginning to converge, and if we do get across lower, then we could quite easily see a pull back down, down towards the sort of the 23 sort of 2380 area, which is where the sort of the Fibonacci retracement line is, but also the top of this sort of former sideways band. So looking for a bit of consolidation at the moment. Prices might just be pulling back, pausing, need to rest before running up to challenge the highs at 2500. If we start to come down though below the yesterday's low around 24.10 sort of area, then we could, as I say, see prices pull back a bit further. Looking at zinc's put in quite a down day today. Price is still holding above this uptrend line. Uptrend line's at 22.67. We had a low today of 22.74 and 3/4. So for the moment, just holding up there. The stochastics, they look like they're set to cross on the cross lower basis today's close. So that certainly does put a bit of a dampener on prices. Prices did try higher yesterday and the day before. They have, however, run into resistance, and as I say, pulling back to consolidate. Whether they now hold this support level remains to be seen. If they come down below it, then we would look for a pullback down towards the 2200 area. And as I say, the crossover in the stochastics, if it does cross over basis to close, then that's not going to look good. Looking at lead, again, lead, like zinc, tried on the upside, ran out of steam at around the 24.72.5 area. We've got the Fibonacci retracement line at 24.59. Prices have come back now, and they're testing the longer term uptrend line as well, and the stochastics have also crossed lower. Trend line is at 24.16. We've had a low today of 23.92. So looking a bit ominous here. A weak close, and with the stochastics crossing lower, could quite easily see prices come back to test the recent lows. If we were to break below there, the actual low there was 23.58. If we were to break below there, then we'd be looking at this as being part of a bear flag. So we had the first down leg, a long flag, and then potentially moving off for a second down leg. Looking at the nickel chart, nickel really has had a pullback. It looked well placed to challenge the highs and to push up to see the continuation of the uptrend. We have had a very strong rally though, but prices have certainly run into overhead supply just ahead or around the 25,000 area. The steep uptrend line was breached yesterday. The longer term uptrend line runs back to July, was breached today. That's at around the 24,090 area. We've had a low today at 23,650. Prices last 23,880, so just picked up a bit of buying, a bit of scale down buying, but after such a big pullback, that's not surprising. Stochastics though free falling, and therefore doesn't look good unless we get a very strong rebound either later on today or tomorrow. It does look as if nickel could well come down to consolidate at lower numbers, and we'd look at the 30-day moving average as a potential area. The average is around 23,300 area, so potential for a bigger pullback in nickel once we've just absorbed a bit of scale down buying. Tin is consolidating. What I don't like about this chart is, one, this looks a bit like a rising wedge, and secondly, the stochastics have crossed lower. So again, we wouldn't be surprised to see prices start to pull back down towards this former support line, which is just below the 26,000 level now. So prices did spike up on Tuesday. They did well, got back towards the sort of this high ground, but it has run out of steam, a bit like nickel. It's had a good rebound, but it's run into overhead selling. So looking for prices managing to consolidate now, but we wouldn't be surprised to see a deeper pullback down towards the sort of 26,000 area. Looking at the wider picture, you can see here this is the euro. Euro has dipped down it's last at 130.60. That's below the 130.72 lows we've seen in recent days. Still holding above the 130 level, and indeed above the 129.68 low we saw back here. But it does look as if the euro is under pressure. The stochastics are looking weak. So if we still see further euro weakness, that's dollar strength, that's likely to provide a headwind for the metals. And then looking at the Dow is just up around 12 points at the moment. It's down from earlier highs, but it has had a very strong run up. This is a 15-minute bar chart of the Dow. So it does coming under a bit of pressure. If the Dow starts to see some profit taking, then that's likely to weigh on the metals as well. So biggest drag is likely to be the dollar, and then if we see weakness in the Dow, that's likely to add to it as well. Plus the fact that the metals have generally put in strong performances recently, and therefore there's room for profit taking. This is William Adams from Fast Markets. Thank you for watching.